Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Sunday, December 12th, 1:48 p.m. New York time. I'm going to review the past five and a half trading days of the futures markets. If you're new to my channel and don't know much about futures, the futures market is an exchange, just like the cryptocurrency, the stocks. They're financial exchanges that offer different financial products. And the futures market is open Sunday evenings and closes Friday. Get more detail for that in the CME exchange. And they go around the clock. So we're going to look at a broad financial selection of products, currencies, US Treasuries, equities, commodities such as crude and gold, including cryptocurrency, Bitcoin. We're looking at 4-hour time frames. Each bar is 4 hours. We're seeing the past 5 days. Are they in a channel? Are they trending? Are they looking to have potential reversals or continuation of trends? Because you could day trade these financial instruments overnight during the daytime, as well as swing trade them on a short duration, as well as trade options on them or just the direct contracts. If you don't understand a lot of that, join my Patreon and I'll explain in the past and again how these financial instruments work. First, look at the US dollar index. So here are the past 5 trading days since Sunday evening, overnight they opened. Had a tight consolidation range. Look at this impulse move up, this green candle impulse moved up, and then followed by that bearish red candle there, reversal. Below that big round number, 96. On the right hand side, you can see the price level, 96, and the red horizontal line are significant round numbers. Well, we had that impulse move down that broke below and closed below it, followed by a green candle. Went into this demand zone, this green zone I labeled the prior week. If you're not aware of this, you must be new to my channel because I showed this in the past. There's potential demand zone buyers. Yep, huge volatility. It went back up above the big round number 96, above 96.5, went down. So those are trade opportunities at those extreme levels that are sitting there working orders to the close positions or enter positions. After that 4-hour candle, which obviously was some binary news event or events plural, maybe more than one event occurred. We had that consolidation from that Tuesday evening, Wednesday into that Thursday, even into that Thursday trading session. Okay, so see this consolidation, this gray box? Well, when you look at this green candle here, had an impulse move down and then rejected that low, gray horizontal lines or quarters. See the ends in 75 or 25 quarters. So that was a fake out. Some new traders entered there and some traders got on the wrong side and they were short, maybe had a close and cover. But that significant move there would tell someone that's it. The trade is going to be bullish, had a consolidation, primary market hours, look at that, impulse move up and then went higher. It's short trading range. Even though I'm showing the 4 hours, these people trading this may have been on it for a few seconds, few hours, even for a few days. but that significant candle right there was the point. Yep. And then through that green demand zone from buyers there, extended it out. As we're running up, yep, you're thinking the quarters might be a reversal, and it did right there, as well as potential run up to that big round number. It did. Huge impulse move up, followed by inside candle and reversal. The trigger could have been used on the break below that inside candle, which broke below there, trading short. Or again, after this occurred, say, hey, we didn't take out that new high. Yes, we had an inside candle and then got reversed. Trading bearish, okay. But majority of it was a tight consolidation range. Majority of the trades occurred between these big round numbers below the 96.50 and above the 96. Building a consolidation for a bigger breakout one way or the other. Again, these are opportunities to take trades, day trades or swing trades. And we're going to go more into currencies on the currencies inside this index momentarily. Let's go into the US Treasuries, the most popular one, the one that has the most volume, the 30-year US Treasury called the bonds. Again, we're looking here on the past. Oops. Yep, past 10 days, but I want to focus on the 5 days more importantly, but we're again want to see the past 10 days. So past Monday right here, Friday, we had that huge impulse up, and then that Friday close into that Sunday open, trending down, broke below this midpoint. Once broke below that midpoint, notice we had these tests up in this price level, which I end up labeling as this supply zone, that red area supply zone. Sellers were up there. Why? Prices went up there, rejected it, went up there, rejected it. But even if I remove that red zone, they were rejecting the price levels, 162.15. Yep. So that was opportunity to trade bearish, significant number right there. Yeah, you're not going to get exactly on that high or that midpoint. But again, if you're trading bearish up here, a lot better than trading bearish down here. On that Wednesday, we closed, broke below big round number 162. Trading short was the bias. That was the thing to do. And then trading short there, look for the next significant number, 161. That's fine to use as a target. Yep. So if you close there, you made a profit. Yeah, it went deeper, but rejected it. Built a consolidation, reversed up into consolidation. Again, we already know that big breakdown at 162 is a significant number because again, that 4-hour candle broke below it. Look at that, we retested it here on a bearish pin bar. Another opportunity gone short Friday. So now I also have this labeled green demand zone. Buyers stepped in here for a few days. So coming into the new week, this is the opportunity for prices to come down here as a trade ideas, as well as up here. This does have a huge trading range. Yep, look at that, went through several price levels. The S&P 500, the past few days, it's an acceleration. Where the beginning, since Sunday, it was trending, and then later in the week, consolidation. So we have a supply zone up here as sellers. We also have this significant demand zone down here with buyers. And down here, we have price levels significantly labeled where events could occur. Yep. So notice that 4,700 and the 4,725 potential triggers for either new buyers to come in or reversals in or around those price levels. As well as down here, that 4,525, 4,500 level. Crude oil. Yep. So from here, which was past Sunday and Monday, it was trending. Higher highs, higher lows. As it was trending, Tuesday, when the market opened, it went up, retest that high of the prior Monday high, which was a supply zone of sellers. That 4-hour candle, impulse move up, closed. Didn't close above it, rejected, closing above that 73 price level for crude oil, went into consolidation from that Tuesday to that Wednesday evening. Again, small trading range popped above 73, rejected it overnight. Notice these dark areas, those are primary trading hours, and the gray areas are the overnight hours. I'm talking about New York Stock Exchange hours. You can trade these nearly 24/7. So that's significant, already knew, expect to be rejection that price, and that's what happened. So the trade idea was, if you were trading this overnight, to gone short. Trended down, broke below that 71, breaking below that 71, a big impulse move down. Consolidation. Well, as soon as we're in consolidation, I labeled that bottom as a demand from buyers. And then from that Thursday night, Friday morning, yep, impulse move up during the early Friday morning hours, and then consolidation phase. So if you want to identify this, and I'll do that right now, look at this as consolidations building staircase pattern up. Or plus Friday, the last 4-hour candle closed as an inside candle. So consolidation, breakout to the upside, consolidation, staircase pattern higher, higher. The momentum is still bullish bias. Closing above the $71 and then rejecting the 72. So the opportunities here are still here to trade. Bullish bias. If you're wrong, get out. So if it goes up, we expect it, if it's going to go potentially to 73, maybe even higher to 73 above that. So day trading or swing trading, the opportunity on the bullish, if that's what you are, we'll take it up there. And vice versa, if it has a retracement lower, if it doesn't break below here or rejects it and reverses, opportunity to trade there, bullish. Yeah, I'm more bullish bias on crude oil. And gold. Mostly consolidation for the past 2 weeks, tight trading range. Red horizontal line, 1800 level, and the red horizontal line, 1775. Most of the prices occurred between those levels. And take it down even tighter. Yep. So from Sunday night all the way through the close, majority of it occurred right there. But if you look at the prior week, yeah, it was above and below. Some volatility, extreme volatility. So green horizontal lines I have labeled as demand zones buyers. But we still had Friday prove to ourselves that testing this zone, supply zone of sellers, is still bearish. Bearish there, bearish there, bearish there. So if it occurs this week, watch for opportunity to trade bearish if it rejects that. As well, coming down to 1775, potential trade idea so it trades bullish. There's some price levels to be aware of. And cryptocurrency, Bitcoin, yeah, all the past week made lows. Yep. Here we had the 10 days ago up here. Look, between that 60,000 and 55,000, broke below it, new level down, all the way below the 50,000, up, staircase pattern, consolidation, breakdown, staircase down, consolidations down. So now you have that supply zone of sellers up here at the 50,000. So again, leaning bearish bias on the cryptocurrency. Yeah, we may have a retracement back up there, or see what happens for another opportunity to trade bearish. Going into the currencies inside the US dollar, look at the biggest one, which is the euro on the 4-hour. So past 10 trading days, again, majority of the price action has occurred above 113 and below 114. The supply zone of sellers in the red area, and that 113. Yep. It's not much of trending. It's mostly consolidation. Nothing wrong with taking it on a smaller price level to look for trade ideas, but there are trade ideas that occurred here. Right there. Again, you can use this higher time frame, the 4-hour, to look for the price levels and manage the trades on the lower time frames. Again, went up there, rejected it. So now we're so close to it. We closed as an inside candle on Friday, the last 4-hour candle, inside candle. Yep. So this whole zone above it, look for opportunities trade bearish. First, retest 113 if it rejects it. For bullish, if it breaks below it, well, down to the next levels. And the Japanese yen. Again, most of the consolidation. And look at all these rejections up here in the supply zone of sellers. Bearish pin bar there, sold off. And if you're going to use candlestick charting, maybe narrow it down to 3 candlestick patterns that you think are the most significant that occur enough to look off trading. So golfing patterns, bearish engulfing, bullish engulfing, or bearish pin bars. And when those occur at significant price levels, they have more significant meaning. Again, bearish pin bar occurred in this demand supply zone of sellers. Yep. Down here, white candle just means that open and close the same price. Right there too. And significant events occurred. Open and close the same price, reversal. White candle, open and close the same price, reversal. Yep, significant candles. British pound, the 3rd largest currency in the US dollar. You see, 2 weeks ago, most of the price action was occurring above the 133. And when we finally came into that close of Friday, look at that. White candle, open and close the same, brought us down to a new lower level below the 133. Where past week, most of the price action above 132 and below 133. Where you have a supply zone of sellers, label right there. And buyers, see these long wicks above 132. Another price level, opportunity for trades. Canadian dollar, 10 days ago, that huge consolidation. But again, most of it, buyers stepping in at 0.78, 0.78. And then coming to past Friday when it closed, starting that Sunday, look at that. Reversal, huge trend from that Sunday night all the way into that Monday night, Tuesday open. Yep, big run up. It's a huge consolidation. Where that was a fake out. Understand that. You had that big impulse move right there, that green, followed another green, and then that red candle. Huge tail on the top, huge tail on the bottom. Definitely faking out a lot of people. And finally, yellow inside candle, small trading range, very small. Reached that impulse move below it, took out that low of that big trading range. So that could have been considered the opportunity. Why? Because you broke below the inside candle, made a lower low, lower high, trading bearish there and riding the trend down. Maybe you were managing on a smaller time frame, but you might have been using this time frame to look for entry signals. And then from that Thursday to that Friday, huge consolidation. Notice this impulse move. This red candle during that 4-hour time period broke below this consolidation, rejected it, closed back inside the consolidation, plus closed inside the green candle, followed by that inside candle, the yellow one. So if you're bullish, well, you look for an opportunity. If we break above this inside candle without taking out the low, you won't know that until the next 4-hour candle is completed. And if that's what you are, then you can take the trade to the upside. Maybe take target price of 79. Vice versa, the same for the downside. Taking it down there. If you're wrong, you get out fast. Again, get a sell rule, real good. Again, you might make small losses, but your gains could be make up very well. And the Swiss franc. Yep. 109, 1.085, 1.08. A lot of different places it's been to for the past week. So 2 weeks ago, huge consolidation right in here, rejecting the 109 and buying at the 0.1085. Well, that was it. But then that came into Sunday night, which one would expect that because it kept on rejecting up here, that you're going to have finally, look at that, red, broke below, closed below, because all these were touching it, but they weren't closed below. That red closed below. White candle, again, means open and close are the same. Huge impulse move down, right into that 108 and consolidation. So you can expect often when you see these huge impulse move candles that you're going to have an exhaustion in either a retrace or a new trend. And that's what happened. Went down on 108, didn't continue having that follow through to close below red, actually turned green, closed above it. Building consolidation in here. Look at that. Inside candle, that yellow one. Nice reversal signal too. It's taking that from that Tuesday primary hours all the way up to that Wednesday evening. So now, same thing. That 109 is rejecting prices. Last 4-hour candle is inside candle. That's a trading opportunity. If we wait till the next 4-hour candle complete, does it close above without taking out the low? Well, one consider it bullish. Again, it depends also what kind of candle forms there, as well as the reversal. So you have that impulse move up there, that green candle, yellow. So again, if we're going to have a reverse on the downside, this potential trade level 1.085 and 108. So the takeaway is, well, let's go to the next one. Australian dollar, very similar to like a Canadian dollar. Consolidation, breakdown to the downside to the 70, reversal, consolidation, demand on buyers where this green is. And we still haven't taken out to the 72 level for the past 2 weeks. So maybe there is no momentum go up there. We'll see what happens after the next 4-hour candle's done. So come Sunday night, if you're not going to look Sunday night, then come Monday, you can look at these because they were open Sunday night, 5 p.m. New York time, these financial instruments. And then you have to wait till that 4-hour candle is completed. Got it? That should be completed by Eastern, well, New York time you use. That's what I'm using. All my times I refer to are New York times.